Indeed. And Christopher, we're also counting down to the release of Russia's GDP number. This is going to be very closely watched because, of course, the West, the international community, curious to get a sense of how the Russian economy has been performing. And when you look at the details here, the economy is actually expected to return to growth on the back of strong fiscal stimulus funding military production. What are we expecting to see from these numbers in your view?
Well, I guess that the last print of interest, macroeconomic print out of Russia, was the July CPI print, which was 4.7% in year-on-year terms, so again above the central bank's 4% target, having dipped down below the target in May and June. And that inflation number is a sign of overheating in Russia's economy. The central bank last month hiked its policy rate by 1 percentage point to 8.5%. There is reports of labor shortages right across the Russian economy. The economy has been run on a mobilization, high-pressure basis, as you mentioned, especially budget financing for military equipment manufacture and production. And the result will be a headline GDP number very likely above zero in year-on-year terms. These numbers are subject to constant revision, of course, but everyone from the central bank in Moscow itself to the international financial institutions, IMF and World Bank, are now expecting that for this calendar year as a whole, Russian GDP will be in positive territory in real terms year on year, so around 1%. And that print we're going to see for the second quarter of this year is likely to be inching up just a zero, a little above. So in other words, the Russian economy, despite the year-on-year fall in the oil price and in oil production in Russia, is returning to growth. And this is in the teeth of the largest sanctions, most severe sanctions in history.